Hello, hello, and welcome to May 31st. We're going into the Elvis Shift tomorrow on June 1st. Let's go and look at what we're going to be doing. First of all, the Elvis Shift that we had with the strategy that we ran through May was with the Stochastics Weekly. That was this scanner here, which was right there, Stochastics Weekly trend uptrend. And what that meant was that the price, here's the weekly, was rising along with the stochastics in agreement. Stochastics was rising on the weekly as well as the price rising on the weekly. Now, we knew going into this scanner and going into May, this would not produce a lot of trading opportunities. And the trading opportunities we got were okay. But the bottom line is that it still didn't perform. Now, what does that come to? It comes to what they call over optimization. And that is that you have so many conditions that have to be met, it virtually has to be almost perfect. And then, of course, the market has to deliver, and market does what it does. And all we can do is set the trade and then watch the trade either go in our favor or out of our favor and then get out if it goes against us. So now, what is the Elvis Shift for June? Well, the Elvis Shift for June, first of all, we're not going to be using the weekly scanner anymore. We're going to be switching over to the okay, I need to raise this a little higher so the machine will see it. And we're going to be going to the stochastics uptrend and stochastics downtrend. Now, what does that mean? That means this, that we're no longer depending on the weekly, we're going to be depending on the daily. There it is. We're going to be depending on the daily. Now, I lost my, oh, there's my trade notes over there. Okay. So, what is, we have found that this scanner here during the month of April gave us more opportunity and gave us into getting into more trades. Remember one of the mantras, idle money makes no money. And we have a lot of idle money sitting. There it is. 6,300 is sitting now in alphas. That's almost 95% all cash. It's great to have cash, but remember, cash has to work for you. You don't work for the cash. So the cash is just sitting there and it has to go to work. So for June, starting tomorrow, we're going to be going with the Elvis Shift for June, which is the Stochastic Trending Scanner. Well, what is a trending scanner? That means is that we're watching the 10 EMA. The 10 EMA must be trading up, and stochastics has to be in agreement. That's all the scanner is going to do. First, the scanner, excuse me. First, the scanner will find the uptrending stochastic, and then it will check the 10 EMA and say, okay, is the 10 EMA also rising with, which is indication of price action. So that is what Stochastic Trending Scanner stands for. Other rules here for the new Elvis Shift going into June. Number one, we are going to still be staying with our 3-to-1 risk ratio. That is that we are going to be going and targeting for the third right there. Oh, got to check a little correction here. We are shooting for the third ratio as a take profit. We are going to take profit. We're not going to go with a dip or low. Once price touches it. So let's use this as an example. Right here. Let's say that we entered on this trade and our stop was somewhat, yeah, there we go. So this will work. This will work right there. Now, notice that the price crashed through the third ratio in this on this demonstration. Oh, I'm actually looking at the fifth ratio, so I want to make that a little bit wider for demonstration purposes only. Let me see if I can find something that will really be much more conducive. Okay, yeah, that will work. Yes, that's it. So For an example, if we had entered the trade on this long candle, then as soon as price crashed through that third ratio, pop goes the weasel, and we are out of the trade. We are not going to be looking for any dipper lows. You touch that, we're out. What has occurred is on several of the trades that we had this past couple of months was that, price crashed through the third ratio and retreated. Crashed through the third ratio and retreated. And our dipper low was running down here. And it was like, we're losing a lot of money. Also remember, the longer you stay in the trade and the trade is not going in your favor, you're not just losing value off the underlying stock, but you're also losing time decay in the options. So we're going to take that profit right there. That's what we'll condition number 2. No, condition number 1, let me finish here also. Once price has cleared the gantry, see here? Once price has cleared our blue line, we are now going to put the stop at the EP. And where that comes from, in the unknown market wizards, there is many traders will move, once the price has going in their favor, they will move the stops up accordingly. They are not going to surrender profit back to the market. This is surrendering profit down the market. Yeah, it can come down and take us out, but if it takes us out here, it's going to take us out for a lot less than going for the full 3-to-1 ratio loss down here. So the idea is to control our risk and keep it under really control. Price action, I just explained, as price crosses the third, we take it out. We are still going to continue with the 100 ROI last bar low. So in the event that something happens, that an option takes off and gets into 100% prior to the third ratio, we are going to last bar low and take it out. If it goes to last bar, if it goes to ROI 150, then we're going to go anything below the high, the close of the day, and we'll take it out. Here, another change, 30 days. At the 30-day mark, if we are not out of the trade, we are going to go to dipper low. So if the price comes up and just mangles along like this, what happened to RCL, we are going to get out of this trade. We're not going to be waiting for the last 30 days of the option. We're going to be looking for exit at the end of the first 30 days. At the end of 60 days, we are going to go to last bar low or last bar high if we're into puts. And that is the Elvis condition for going into June 1st. Excuse me, short of breath there. Now, so let's go on. So now we're going to go to our scanner. And here's our scanner for the uptrend. And going over now to the other one. And here's our scanner. There's a weekly downtrend. So let's go ahead and load up the stochastics downtrend. Remember, all this is looking for is stochastics RSI all in a positive direction along with confirmation from the 10 EMA. So we're on the alphas and we're going to run the scan. And the answer is no, we have no match. So now we're going to go and run the scan for the upside to the alphas. And we have a match. We have a match. So now we are going to go to Cougar. And Cougar. Let's see, where are you? There you are. There. And now we are here. And now you have seen that we have already started setting up this trade for tomorrow for June 1st. And there it is. These notes will be updated from the other screen in the future for tomorrow for the end of the trade. But the bottom line is this is going to be our entry on this high. This is our stop down here. We're looking at $1.09 is our risk right here. And we'll be applying the rules. So this is our trade set up for tonight and going into tomorrow, June 1st, and we'll see if it will trigger, and we'll be report back at the end of day of June 1st of 2021. And with that, I thank you and get ready for the Elvis Shift for June 2021. And with thank you. Bye-bye.